Hello and welcome. Today, we're going to dive into that document you probably filed away and hope you never have to look at again, your insurance policy. But what is it really? Well, we're going to see that it's so much more than just paperwork. It's a powerful legal promise.
So, let me ask you, have you ever actually stopped to think about what you signed up for? Beyond the payments that come out of your account every month. It's not like buying something off a shelf. You've entered into a formal, legally binding agreement. Okay, let's get into what that actually means.
So first things first, and this is the most important takeaway. At its very heart, your insurance policy is a contract. And that means it's not a list of suggestions or friendly guidelines. Nope, it's a strict rulebook for a promise. And both you and the insurance company have to play by it.
And this is the absolute foundation for everything else we're going to talk about. Because it's a contract, it has to follow some very specific legal rules to even be considered valid. If it doesn't check all the boxes, then that promise isn't really enforceable.
So for this whole thing to be legally legit, 6 essential elements have to be there. Just think about the last time you bought insurance. You filling out the application? That's the offer. The insurance company approving it and sending you the policy documents? That's the acceptance. And that money you pay them? That's what the law calls consideration. On top of that, you both have to intend for it to be a serious deal. You both have to be legally able to make a contract, an adult of sound mind. And of course, what you're insuring has to be for a legal purpose. Let's just zoom in on that word consideration for a second, because it sounds a bit legal-ish, but it's actually super simple. It's just the value that's being exchanged. Your consideration is the premium you pay every month. And the insurance consideration, it's their big promise to pay up if something bad happens. That's it, a simple trade of value.
All right, so what happens when someone doesn't follow the rulebook? What if one side breaks their promise? Well, because this is a contract, there are very clear consequences, and believe me, they apply to everybody involved, you and your insurer.
And this is absolutely a two-way street. On the insurer's side, they're in breach if they wrongly deny a claim that should be paid, or if they drag their feet for no good reason. But on your side, you can breach the contract too. Things like not paying your premiums, or, lying about some important detail on your application, those are big no-nos.
So, let's say your insurer breaks the rules. What can you do about it? Well, the law gives you options, or remedies. You could ask a court for specific performance, which is basically a judge telling the company, pay the claim, period. Or you could sue for damages to get paid back for your financial losses. You have tools to make them keep their promise. But, of course, it goes both ways. If you don't pay up, they can straight up cancel your policy. If you file a fake claim, they can obviously refuse to pay. And in really serious cases, like if you hid a major health condition on a life insurance application, they might be able to void the policy altogether. And that means treating it like it never ever existed.
Okay. Let's zoom out for a second to talk about a massive idea that holds up the entire world of insurance. It's called insurable interest, and it's the reason insurance isn't just another form of gambling.
So what on earth does that mean? Well, simply put, you can't buy fire insurance on your neighbor's house and then sit back hoping for a payday. You have to have a real, direct financial stake in whatever you're insuring. You have to actually stand to lose money if something happens to it. You've got to have skin in the game.
And this quote right here, it just nails the whole idea. The entire point of insurance is to make you whole again after you've suffered a loss. It's not designed to make you richer than you were before the incident happened. It's about getting you back to square one, not helping you win the lottery.
And you see this principle everywhere in the real world. Ownership is the easy one, right? It's your house, your car. But think about it. The bank that gave you a mortgage, they have an insurable interest in your house too. Your legal responsibility to other drivers on the road, that counts. Even the dry cleaner has an insurable interest in the clothes you left with them. It's all about that direct financial connection.
Okay, so we've got the contract and its core rules. But who is watching the watchers? Who makes sure these huge insurance companies are playing a fair game? Well, that's where government regulation steps in.
Pretty much every country has a special agency that oversees the insurance industry. Here, we're looking at Botswana's NBFIRA Act. The best way to think about an organization like this is as a referee. Their job is to set the ground rules, protect the players, that's you, and make sure the whole system is stable and can be trusted. And these laws have a direct impact on protecting your contract. Licensing makes sure a company is financially solid before they're allowed to sell you a policy. The rules of conduct demand they treat you fairly and handle claims properly. And solvency requirements, that's the big one. It forces insurers to have enough cash saved up to actually pay your claim down the road. It's all designed to make sure their promise is worth the paper it's written on.
So there you have it. Your policy isn't just a brochure. It's a powerful two-way promise built on contract law and watched over by a referee. It's a serious agreement with serious rules for both sides. Which really just leaves one last question for you to think about. Do you actually know the terms of the promise that you've agreed to?